What are the intricate strategies companies use to manipulate their financial statements? Have you ever wondered why some folks seem to have a golden touch when it comes to investments, while others can't seem to catch a break? Well, it all boils down to how they read those financial statements. If you want to up your game in the financial world, you've got to look beyond the surface numbers. Take, for example, a tech company called BlueSky Innovations. At first glance, their financials might seem rock solid, with earnings on the rise and a promising balance sheet. But don't be fooled. Those numbers might be dressed up fancier than a peacock on parade. Let's zoom in on a sneaky tactic known as aggressive revenue recognition. Picture this. BlueSky lands a big contract with a major client. Instead of spreading out the income over the life of the contract, they decide to book it all in one go. Why? To pump up their earnings, of course. Better numbers mean a shinier reputation and maybe even cheaper loans from impressed creditors. But wait, there's more to this financial magic show. Ever heard of earnings management? It's like the Picasso of accounting tricks. Companies play around with the rules to make their profits look stable, even when things are shaky behind the scenes. It's all about creating the illusion of financial health to keep shareholders happy. But sometimes, things go too far. Remember Centennial Technologies and Sunbeam? They took these tricks to the dark side and it all blew up in their faces, dragging investors down with them. So how can you avoid getting caught in this financial circus? Think like a detective. Don't just skim the surface of financial statements. Dive into the footnotes and sniff out the accounting policies. And hey, don't be afraid to ask questions when things look fishy. Now, on to the SEC, the financial watchdogs. Since way back in 1998, they've been on a mission to clean up the accounting mess. They've slapped fines and charges on shady companies, making everyone think twice before playing fast and loose with the numbers. But here's the thing. It's not just up to the regulators. You, as an investor, have power too. Use your vote to push for transparency and honesty in financial reporting. Because in the world of finance, we're all in this together. Now, let's decode some financial jargon. Ever heard of revenue manipulation? It's when a company inflates its sales numbers without the cash to back it up. Sneaky, right? Keep an eye on the balance sheet to spot these tricks. And don't forget about expenses. Companies might delay big spending to make their profits look prettier. It's like sweeping dirt under the rug. It works for a while, but eventually the mess comes out. Lastly, let's talk about assets. Companies sometimes overvalue them to make themselves look richer than they are. But when the truth comes out, investors get burned. So, what's the bottom line? Trust, but verify. Don't take financial statements at face value. Dig deeper, ask questions, and always keep your eyes peeled for red flags. And remember, in the world of finance, it's better to be a skeptic than a sucker. So, stay sharp, stay curious, and happy investing. Thank you for watching. Don't forget to like, comment, and subscribe. Watch more videos by clicking on this video right over here.